Hello and welcome to interest.co.nz. I'm Janae Tibshirani and today I'm joined by the London-based founder of WorldRemit, Ismail Ahmed. Thank you for joining us, Ismail.
Thank you.
WorldRemit provides a service that lets people transfer money abroad as an electronic bank transfer or mobile phone airtime top-up. It markets itself as being a convenient, low-cost alternative to traditional money transfer companies that use high street agents and charge high fees. So, Ismail, I'm really interested to know what sparked you to start WorldRemit in 2010. This was a time where new anti-money laundering laws kicked in, which really would have hiked compliance costs for money remitters, and also a time where banks seem to be trying to distance themselves from money remittance due to this anti-money laundering risk. So, why did you start the business?
I have been involved in remittances for many years. I come from Somaliland, a country which relies on remittances. So before I left Somaliland, we were a recipient of remittances. And then when I came to study in the UK, I became a sender. So I had a first-hand knowledge of the challenges faced by the migrants. And I also used to work for the UN as a compliance advisor, and that was when I saw the challenges of compliance. So when I set up WorldRemit in 2010, we built a robust compliance system and the culture. And I knew the trend of the industry. The industry was moving to to meeting stringent anti-money laundering regulations.
Okay, and how have you fared in the current environment here in New Zealand? As you are well aware, the money remittance firm eTrans International has taken Kiwibank to court because Kiwibank has wanted to close its accounts because of the anti-money laundering risk that's causing for Kiwibank. So that's been a really interesting case here, and that's currently still before a High Court judge because Kiwibank is one of the banks, like most of them, which are saying, we don't want anything to do with you, money remittance firms, you are too risky for us. How are you dealing with that?
Before we started, we had invested heavily in compliance. We built a culture of compliance. We're a big player. We raised a lot of money. We raised close to $200 million. A big chunk of that money went to building robust compliance systems. And so we partner our work with a lot of the big global banks. So we've not been as impacted by the de-risking as the traditional players, because traditional players require a local bank account so they can take the money they collect into a local branch. For us, it's different because we don't accept cash. We're cashless, and we use debit cards, credit cards to process transactions. So for us, what we need are global banks that help us to process cards. We don't need a bank account in every major city or town.
Okay, that's interesting. So you're taking a different approach to manage some of these AML risks, which you believe some of the existing players in the industry aren't doing.
The online money transfer is quite different from the traditional money transfer. In this industry, you have as much as 95% of transactions taking place at offline locations. And the problem, historically, the challenge with the traditional money transfer has been that there is no audit trail. Somebody goes to ATM or takes money from somewhere, goes to a corner shop, and then sends a transaction. In the online setting, there is an audit trail. The migrant uses a debit card or transfers the money from a bank account. So if a transaction becomes suspicious, law enforcement agencies have something to check, which is a large piece of data we capture to process transactions. So there is that difference between the traditional and the digital money transfers. And also in the traditional money transfer businesses, you have independent agents, which are different from the principals, the companies that own the networks. And often the big players like MoneyGram, Western Union, or smaller players that are doing traditional money transfer business are effectively outsourcing core compliance functions to a small shop, which is really essentially doing other businesses. And the challenge with that is that that corner shop or the person who's doing that transaction would not take compliance as seriously as the company itself, the company that is processing the transactions. That is an arrangement which predates the stringent anti-money laundering regulations, which effectively require the business to own the customer. Because in the traditional money transfer business, agents own the customers. They do the KYC.
Sure.
That is the difference. And that's where a lot of banks have some concerns.
Okay, so in this case here with eTrans International, and also I believe another firm which has just last week, I understand, taken Kiwi Bank to court as well. So that's the second company that's saying, Kiwi Bank, we aren't going to put up with you closing our accounts like all the other banks have. These firms are arguing largely that banks' moves to move away from them are going to drive the industry into the ground because they can't operate without banks. Do you think actually remittance firms just need to change their business models in a way which you guys have?
I think the industry is moving digital, and there's a consolidation because compliance requires a lot of investment. So a lot of smaller players that historically used to operate in just single corridor, like transferring money to Fiji or to Philippines or just one country, cannot afford the investment. So that is changing already. They are also moving to online. I think the difficulty now is that some banks are taking a blanket approach into de-risking and saying that they want to exit from the industry as a whole. We think that is wrong. And I don't think that helps the banks, these banks, in terms of their compliance with the regulations, because the money transfer industry is huge. We're talking about $600 billion. Historically, more than half of that of that volume used to go through informal networks. I think the regulation has helped to move the industry to formal financial services, where most of the players are now registered. What the de-risking is doing is that it is reversing that trend. And it doesn't mean that these banks would not be used by money transfer businesses because of the nature of the business. I mean, a large percentage of retailers are involved in the money transfers. So when a bank says that they have shut down all the accounts of money transfer businesses, it means some of those retailers that are mixing businesses would continue to deposit funds, money transfer funds, into banks that think that they are not working with money transfer. And
Sure.
I think it exposes these companies to greater risk because they are not investing the capital needed to build compliance teams that understand the challenge of this industry. So
Sure.
that's where we think the blanket approach even undermines the compliance of those banks.
Right, so blanket approach is basically, it could cause these firms to go underground and operate, without complying to any rules.
Effectively, or by mixing businesses. And it is like, I think some regulators are likely to view that approach willful blindness. I think it's the terminology we use to comply. Because banks know when they say we've taken a blanket approach, they know a big chunk of remittance is still going through their networks. And they are avoiding to invest the capital needed to build the compliance infrastructure. Whereas the banks that are taking a case-by-case approach, working closely with the industry associations, learning from the companies they work with, and they're also sometimes getting tip-offs from the clients that are in the industry. So that, because those are also interested to make sure that that bank doesn't get fined by the US regulators, and therefore they go out of their way to help these banks. But for those that claim that they don't have any money transfer accounts, they do have.
Right. So, I mean, here in New Zealand, the banks seem to have taken a blanket approach to money remitters. Do you think To what extent do you think that's a problem, that it is actually happening? The banks are actually dealing with these customers, but, that they're not sort of acknowledging it. Do you think that's a big problem here?
It is a big problem in New Zealand, and I think the New Zealand de-risking was far bigger than anything we've seen elsewhere in the world. So, because here you have a small number of banks that dominate, the banking in New Zealand, and we understand 2 of the 4 large banks decided to take a blanket approach. So certainly, I think de-risking is a far bigger issue in New Zealand than elsewhere.
And do you think that is actually driving some remitters, to operate sort of not above board, to operate without going through the official channels? Because, they still want to continue doing business. They can't do it officially through a bank. Do you think the banks are actually still, processing these transactions unofficially?
Most of the transactions in this industry take place at corner shops that are mixing money transfers with other business. So if a business has a food store which is 90% of their business and money transfer is only 10%, they're not likely to disclose the 10%.
Sure.
And that will continue. And I think so banks are still working with the same businesses, but these are not registered as money transfers. So all they're doing is that they're actually processing transactions that are money transferred, but they're not aware. And they're not helping the regulators get the suspicious activity reports, get the transaction volume and so on. So I think it's quite a strange approach. And if there is a lesson that New Zealand that should learn from USA and Europe, it's the fact that the blanket approach does not work. The banks need to take a sort of a case-by-case approach.
Interesting. Ismail, finally, what is happening in the UK and the US on this? They have taken the blanket approach. Where are things at now there?
In the beginning, 10 years ago when I was at the UN, some of the big US banks took the blanket approach, but then they have changed, and some of the larger banks do a case-by-case approach. There is still de-risking is a big issue in the USA, but it's not like New Zealand. The same in the UK. Some banks, Barclays, Royal Bank of Scotland, Lloyds, took the approach of case by case. I mean, they have shut down a lot of money transfer business accounts, but they have not exited from the industry as a whole. Okay. I think globally it's only HSBC Bank which took the blanket approach. We don't think that is working for them.
Right. Okay, Ismail, well, I think we have to leave it there. That's fascinating stuff, and I think, no doubt all eyes will be on the outcomes of these 2 court cases here in New Zealand to sort of see how things pan out. But thank you so much for your time. Really appreciate it.
Thank you.
And I'm Janae Tibshirani from interest.co.nz and have been joined today by Ismail Ahmed.